First of all, I don't think the machines are going to replace the trader. We just have to draw a line and see who we're talking about as the trader. Machines improve and to a certain extent replace some of the current automation when it comes to high frequency firms, market making firms, arbitrage firms. On a retail level, I think that's going to be very challenging for individual investors. What you're seeing from AI, basically taking some subjective gut feeling and turning it into a mechanical approach, is a validation of what we've been talking about for a long time, because I don't think there is such a thing as a, quote, good trader. I think what there is now is somebody that understands how to optimize mechanics. The challenge of teaching entire different demographics of traders and investors, and passive investors and active investors, everybody else, it's made easier now. I think I can get from point A to point B a little easier.
Does this create a new arms race for the most sophisticated AI?
You can never turn back technology. I don't like the what if argument. And the real reason I gave that presentation last night was because when you listen to people talk about AI and how it's going to impact the world of finance, most of the discussions are negative. There's very few people that have addressed the positive sides of tokenization, digitization, and AI, and how it will impact the individual investor going forward. If you were to ask me, is it going to widen the gap or narrow it? I mean, it's a no-brainer. It's going to narrow it. It's going to level the playing field. It's going to make every single market more efficient, more competitive, tighter bid-ask spreads, and lower costs. It has to help the individual investor.
What specific strategies will you use to penetrate the Mexican retail trading market?
Now that is a true challenge because the marketplace, the derivatives marketplace in Mexico right now does not really support an active retail participation. It's more of trade by appointment, and it's not really an active retail marketplace. The way I would build a culture here, and the way I would build financial service company or online brokerage, whatever it is, I would take the approach that Mexico has to globalize, meaning that you're going to support local markets, but the only way you get local markets to upgrade their technology and to support products that support retail investors is to allow those same pieces of technology to support other marketplaces, like, for example, in the US. And then what happens is the exchanges, which are mostly public companies, they don't want to lose the revenue to exchanges in other countries. So they finally, they build the technology that they need to build to support retail investors. And Mexico is a challenge because wealth disparity in Mexico is huge, but there is plenty of money. You can see in Mexico City alone, it's a very wealthy city. There are plenty of people in Mexico that want to trade, and there's plenty of really good education here around finance, trading, statistics, math, quantitative stuff. It's amazing.
Is human risk management still needed when AI can monitor markets and news 24/7?
If I worry about anything, I obviously worry about customer risk. The way the world works is the amount of capital that customers have to put up on the security side is about 2 standard deviations away, and we have plenty of moves that are outside of 2 standard deviations. On the future side, it's like 1 standard deviation away. So there is a lot of risk for firms, and a lot of the way we manage that risk is very subjective. There are firms that will auto-liquidate customers, and if you are a firm that auto-liquidates and you want to improve upon that, AI will help you. There are other firms that want to be a little bit more cautious about auto-liquidation, and managing risk is AI is only going to help them. It's not going to make things more difficult. It's actually going to help them. It's going to put them in a position where they can manage more products and more customers later on in the day so that they actually take less risk for the firms. So I think that integrating AI into risk management is going to help, whether it's auto liquidation or whether it's kind of more, traditional account management. There are certain things, once you get outside of 2 standard deviations, you get to 3 and 4 standard deviations, nobody can do anything. You're just at the mercy of the markets. So at that point, all you could hope for is that the customer size doesn't kill you. But there's nothing any firm could do. Like, it's a joke when people go, well, we manage risk better than the next firm. I'm like, really? How? It's all bullshit. Nobody manages risk any better than anybody else. Everybody manages risk the exact same way. Some firms don't understand risk. Like, if you go back to the banking crisis in the US in 2022, and you start thinking about how these huge banks, all these, multi-billion dollar, $100 billion banks effectively couldn't even manage laddering interest rate risk and how bad they were at it. And then you think about, like, these guys are supposed to be good, and they couldn't even manage a simple yield curve. And we managed derivatives risk on, a level that's 18 times that. There's nothing we can do on a 3 or 4 or 5 or 7 standard deviation move. There's nothing we can do.
How do you see sports betting as competition for retail trading?
In the first 10 minutes of the stock market in the U.S. being open today, we traded more notional flow than the entire sports betting market will trade for the rest of the year. So let's put it around what it really is. It's a tiny little pissant piece of notional business when it comes down to it. The other problem with sports betting is it is mathematically impossible, other than a tiny little percentage of people, to make money betting on sports, because the bid-ask spread, essentially the amount of rake from the firms, is too great. FanDuel makes too much money, DraftKings makes too much money, the casinos make too much money. There's no such thing as strategy. There's no such thing as an individual investor being able to game the sports betting world. In order for sports betting to go to a really commercial level, to standardize into a commercial level, it has to go exchange-based. FanDuel has to be careful. The CME will swallow them alive. The CME is 1,000 times, the amount of business that goes through is 1,000 times bigger than FanDuel. And what I think is going to happen, which is sports betting goes exchange-based, when Citadel starts making markets on football games, and there's no 10% edge to the house because they're willing to do it for a fraction of 1%, FanDuel better be careful.
What cultural and regulatory considerations would Tastylive need to address if expanding into Mexico?
I would love to expand into Mexico. I pitched it a year ago to our team as we look at global expansion and stuff like that, and I couldn't get enough buy-in just because size of the market. There's a lot of places that we all want to go to, and the challenge is convincing your team, where do you want to spend your resources? It's a very competitive marketplace, and we only have a couple of sources of revenue: banking, commissions, and payment for order. That's all. In our world, how we decide to spend that money, that's how we decide our future. We have to decide whether we want to commit to our own technology, commit to AI, or commit to different kinds of global expansion. And the challenge with global expansion is, if you believe in tokenization as the globalized route, if you believe in a decentralized route, then it puts a lot of pressure on making a decision to go through the whole regulatory process in Mexico. And not just Mexico, Brazil, any Latin American country, any Asian country, it doesn't matter. The challenge for us is, if you believe in the future of a decentralized marketplace, at least to a certain extent, supported by major exchanges, that it is really hard to commit. Like, I'll give you an example. We spent $10 million the last 2 years trying to go live in Canada, which is tiny. I don't know how many million people they have in Canada, but it's a small marketplace. We spent $10 million trying to go live in Canada. We couldn't even find a firm to clear us. Finally, we're like, screw it. We just ate the $10 million loss and decided we'll wait for tokenized markets. That's the challenge we have.
How has retail trading changed since the pandemic-driven boom?
That was a transformational moment for sure, because people were home. We followed the pandemic up with the meme stock explosion in 2021. Definitely transformational. We've kept a decent percentage of that momentum going because the derivatives markets have continued to expand. We definitely engaged a lot of new people. Looking back on it, I'm not saying the pandemic was a good thing, but all those events and that transformation was a good thing. I look at everything that brings people into the marketplace as a good thing.
Terry Duffy used to call futures institutional, but now he's reconsidering. Thoughts?
About 17 years ago, Scott Sherley, co-founder, we went to a hockey game with Terry Duffy. Terry Duffy, Scott, and myself got into a shouting match and almost had to be escorted out because we represented retail customers. And I just lost it on him because of exactly what you just said. We're an institutional firm, the future of this business institutions. And I'm like, that you're so full of shit. That is not the future. The future is micro products. The future is options. The future is bringing retail investors into enough space, and you will grow your business tenfold. And he just flat out, he wanted to throw a beer at me. We're friends. We're okay. 18 years later, they finally they finally got the message. I don't know what else I can say. This is what I've been preaching for 20 years. 25 years.
How is the OCC Renaissance project's long delay impacting the market?
My experiences with OCC have been fine. I don't have a real beef with them on any level. They've been supportive, of Tasty, of Thinkorswim, and of all the new product creation that we've done over the years. They have actually supported us. For any retail firm, we all know that we need a much better margin system. We need the technology right now is, we're decades old, and more than decades old. And this upgrade is long overdue. So it's more of a frustration. We should be able to build technology much faster. And it's something that's holding back the whole industry. But if you're asking, am I upset with them? No, frustrated with them. And I think if you ask them, they're super frustrated with themselves. Because, anytime you go out there and you make promises after promises after promises, you lose a lot of credibility. And that credibility is, that's your lifeblood. The risk is that somebody else, like a decentralized marketplace or another marketplace, jumps in front and steals market share. The risk is not that all of a sudden Tasty's not going to be able to route business or anything like that. The risk is we have plenty of workarounds for all the margin requirements and all that kind of stuff. The challenge is if somebody else steps up and grabs their market share.
What's your take on Washington's shifting stance toward crypto?
I am very happy with a lot of the changes, especially the SEC and especially at other places around the crypto fences. I do worry that certain aspects of the Trump administration and the way they approach things, they're completely conflicted and they're abusing the system. I am not a fan of that administration or any of those people. But on the surface, with respect to crypto firms and respect to firms like Tasty and essentially supporting the technology and the growth of that marketplace, that I am a fan of. We still need fences. We still need some regulation, but we needed to lower the fences so that people could innovate. They have provided that. I just hope they don't go too far with trying to enrich themselves.